Real estate investing for beginners, step-by-step guide for 2025. Hey everyone, welcome back to the channel. And today we're diving into one of the most powerful ways to build long-term wealth: real estate investing. Now, I know what you might be thinking, isn't real estate only for the wealthy? Or don't you need a ton of cash to get started? The truth is, with the right strategies, any beginner can start investing in real estate even with limited money. So in this video, I'll walk you step by step through the basics of real estate investing, the different strategies you can use, the risks to watch out for, and tips to help you start in 2025. Let's get started. Number 1, why real estate is so powerful. Before we dive into the how, let's answer the question, why real estate? Cash flow. Rental properties can generate consistent income every single month. Appreciation. Over time, property values usually go up, meaning your wealth grows passively. Leverage. Unlike stocks, you can buy real estate using other people's money, usually through mortgages. That means you control a large asset with a smaller upfront investment. Tax benefits. Real estate investors get unique tax deductions like depreciation, mortgage interest, and expenses. Inflation hedge. When prices rise, so do rents, which means your property can actually perform better during inflation. In short, real estate builds wealth in multiple ways at once, which is why so many millionaires call it the best investment vehicle. Number 2, ways beginners can invest in real estate. If you're just starting out, you might be wondering, okay, but what's the best way to get into real estate? Here are some of the most common beginner strategies. 1, house hacking. Probably the easiest way to get started. You buy a property, live in one part of it, and rent out the other units. Example, buy a duplex, live on one side, rent the other side, the rent covers most or all of your mortgage. It's like living for free while building equity. 2, traditional rental properties. This is the classic approach. Buy a single-family home or apartment, rent it out, and collect cash flow. Key is to analyze the numbers. Look at rental income versus mortgage, taxes, insurance, and maintenance. Beginners should focus on cash flow positive properties, not just appreciation. 3, short-term rentals, Airbnb or VRBO. Renting your property nightly or weekly can earn more than traditional long-term tenants. Great in tourist areas, but be careful, regulations in many cities are becoming stricter. You'll also spend more time managing guests unless you hire a property manager. 4, real estate investment trusts. REITs. Don't want to deal with tenants or maintenance? You can invest in REITs, publicly traded companies that own income-producing properties. Buying shares in a REIT is just like buying a stock, but you earn dividends from real estate profits. This is the lowest barrier to entry for beginners. 5, real estate crowdfunding platforms. Platforms like Fundrise or Realty Mogul let you invest in real estate projects with as little as $500. You pool money with other investors to buy larger properties, and you get paid from the profits. It's passive, but you don't control the investment the way you would with a property you own yourself. 6, flipping houses. Buying undervalued homes, renovating them, and selling for a profit can be very profitable, but also risky for beginners because it requires capital, experience, and understanding of construction costs. Best to learn this after you've built some real estate knowledge. So as a beginner, the easiest ways to start are house hacking, rental properties, or Number 3, how to analyze a property. Now, let's say you're ready to buy your first property. How do you know if it's a good investment? Here are 3 key numbers every beginner must understand. Cash flow. Formula: rental income, expenses, mortgage, taxes, insurance, maintenance. If the number is positive, it's a good sign. Cap rate, capitalization rate. Formula: net operating income divided by purchase price. A higher cap rate usually means better returns. In most markets, a 6 to 8% cap rate is considered solid. The 1% rule, a quick rule of thumb. If the monthly rent is at least 1% of the purchase price, the property is more likely to be profitable. Example, $200,000 property should bring in at least $2,000 per month in rent. These metrics help you avoid buying a property that looks good on paper, but actually loses money. Number 4, financing for beginners. The biggest question beginners ask, how do I pay for all this? Traditional mortgage, best if you're house hacking or buying your first home. Low interest rates and sometimes just 3 to 5% down. FHA loans, government-backed loans that let you buy multifamily properties with a low down payment. Private lenders or hard money loans, useful for flips or short-term projects. Partnerships, teaming up with someone who has money while you manage the property. Remember, real estate is unique because you don't need to pay the full price up front. Leverage is what makes it powerful. Number 5, risks beginners should know. Real estate isn't risk-free, so let's cover a few things beginners should watch out for. Vacancies. If a tenant moves out, can you still cover the mortgage? Always have reserves. Maintenance costs, roof repairs, plumbing, unexpected issues. Budget at least 1 to 2% of property value per year for maintenance. Market fluctuations, property values can drop. Don't buy based only on appreciation. Hopes make sure it cash flows now. Bad tenants, they can damage property or stop paying rent. Screening tenants carefully is critical. Over leverage, borrowing too much money without safety nets can backfire. Always invest conservatively. Number 6. Tips for beginners in 2025. Start small. Don't try to buy a 20-unit apartment building right away. Begin with house hacking or a single-family rental. Build a team. Find a good real estate agent, mortgage broker, property inspector, and accountant. Real estate is a team sport. Location matters. A cheap property in a bad area isn't always a deal. Look for safe neighborhoods, good schools, and job growth. Think long-term. Real estate rewards patience. Even small investments today can grow into major wealth in 10 to 20 years. Keep learning, read books, watch videos, listen to podcasts. The more you know, the fewer mistakes you'll make. All right, let's wrap this up. Real estate investing might sound intimidating at first, but once you understand the basics, it becomes a powerful path to wealth. To recap, start with beginner-friendly strategies like house hacking, rental properties, or REITs. Always analyze the numbers, cash flow, cap rate, and the 1% rule. Be smart with financing and avoid over-leveraging. And most importantly, think long-term. Real estate isn't a get-rich-quick scheme. It's a build wealth slowly but surely plan. If you found this video helpful, don't forget to smash that like button, subscribe, and hit the notification bell so you don't miss future videos on investing in financial freedom. And I'd love to hear from you. Are you planning to buy your first rental property in 2025? Or are you starting with REITs and crowdfunding? Drop a comment below. I'll be replying to as many as I can. Thanks for watching. And remember, the best time to invest in real estate was yesterday, but the second best time is today.